Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Right now we see gold at $1,531, down 2.97% or down $46.78 on the day. We also see silver down to $14.79, down 6.85% on the day, or down $1.08, but it looks like there is some support around this $14.50 level. So, with that said, I'm going to be sharing an article from Seeking Alpha talking about there still could be good news for 2020. I'm going to try to make a more positive video because a lot of times when there is so much emotional panic, emotional fear in the air, it does cause people to panic sell, to cause, make silly decisions. So with that said, let's go over some of the summary. By the way, the link to this article from Seeking Alpha will be in the description. So every dip since 2018 has been a buying opportunity, which is true because the price always corrects, right? If the price were to keep going down, then it wouldn't be a buying opportunity. But the thing is that prices go up and down, and since they do correct, when prices are low right now, this means that you can buy your silver for cheaper. It's a discount. And then once the price goes back up, then it's a selling opportunity. Central banks will continue to push rates lower. The Fed funds rate is steaming to zero. Currency values are falling because of declining faith. That is all the dollar is backed by, is faith. If the dollar does not have faith in it, if it's losing that faith, you can see how its true value, being worthless, is exposed. Gold is a global means of exchange. On a global scale, it's like everyone's speaking, it's like the benefits of everyone speaking the same language, but in a monetary form. You can take gold to China, to wherever, and trade it, where US dollars are only spent in America. So anyways, on Sunday night, March 8th, when all hell broke loose in the markets across all asset classes, a flight to quality wave took the price of two assets higher. US bonds rose along with the price of gold. Gold broke out to the upside in June 2019 when it rose above the July 2016 high in level of critical technical resistance of $1,377 per ounce. The move higher came back to the guidance of the U.S. Central Bank in June that interest rates would decline by the end of last year. The break to the upside ignited the next leg of a full bull market that began in early 2000 that lifted gold from a low of near $250 per ounce to an all-time peak of $1,920 in 2011. We also remember $50 silver in 2011 during the same time. So gold rose in an environment where short-term U.S. rates were at 0% and the Fed was purchasing government debt securities with its quantitative easing program to push rates lower further out along the yield curve. So as the impact of the 2008 global financial crisis eased, gold declined to a low of $1,046 per ounce in late 2015, and at the time the Fed began to tighten credit once again. The pivot from monetary policy tightening to accommodation in June 2019 lit a bullish fuse under the gold market, which sent the price higher to a high of $1,559 in September, which was the peak in 2019. The Fed cut short-term rates by 75 basis points last year. On January 8, 2020, gold reached a higher peak of $1,613 as tensions between U.S. and Iran reached a boiling point in Iraq. So on March 3rd, in response to the spread of COVID-19, the U.S. Central Bank announced the emergency 50 basis point reduction in the Fed funds rate. On March 9th, the price of gold reached another higher high at $1,704 per ounce. And by the end of the week, the price traded to a low that was barely over $1,500 and $200 below the week's high. So do you see the pattern here, where when Fed cuts interest rates, especially 75 basis point, gold is correlating the price to it. So every dip since 2018 has been a buying opportunity because prices do rise again when it goes to it, like the above paragraph was saying, when it goes to an all-time low of $1,054, then it shoots back up to $1,600. Then it goes back down, then it goes back up. So every dip since 2018 has been a buying opportunity. In risk-off environments where the prices of all assets become falling knives, it is tempting to clear the decks, to move to the sidelines and wait for the stability to return to markets. When it comes to gold, the yellow metal could wind up being different. as central banks around the world hold gold as part of their foreign exchange reserves. That does not mean that the price could plunge as fear builds and markets become irrational. But it does mean that those periods could become tight to gently buy add long positions in the yellow metal. So since 2018, every dip in the gold market's been a buying opportunity. You can see that right there. It just means you're getting it for cheaper. It's like going to the store. If you see something on sale, isn't that good? Isn't that a good thing? That just means you're getting it for cheaper. That's the way you need to look at this when prices are lower. So the weekly chart shows that the correction since August 2018 has been another chance to buy gold as the price eventually put in a higher high. Meanwhile, the wild price variance in all markets has lifted weekly historical volatility in the gold market to its highest level in years at over 28%. There are no guarantees that the pattern of higher lows in gold will continue, as falling knives in the norm these days. In 2008, amid global financial crisis, the price of gold fell from over $1,030 to $681. However, central banks' policy is likely to provide continued support for the price of gold over the coming days, weeks, and perhaps months. To confuse matters, gold put in a bearish reversal on the weekly chart last week. So, now let's go into, what currency's value really is, because this is so important to understand, guys. This is really important to understand. The dollar is backed by nothing. The dollar has no real value, and that is because our money isn't backed by anything. Once upon a time, our money was backed by gold and silver, but now it's not. So currency values are falling because of declining faith. The 2008 global financial crisis occurred because of the confluence of economic events. The housing and mortgage-backed security crisis in the U.S. and sovereign debt crisis in Europe were the root causes. See, in 2020, the root cause is different and a lot harder to deal with, as COVID-19 threatens the health of the global population. In contrast, in 2008, there was a threat to savings and ability to earn. As the virus spreads around the globe with no treatment and no vaccine, governments are taking unprecedented action to slow the spread. Italy closes borders, businesses, and all activity to ground a halt. The U.S. will close its borders to flights from Europe in a period starting March 13th. Markets continue to drop after the Oval Office address from U.S. President, a mass injection by the U.S. Fed, and moves by the European Central Bank. As the number of fatalities and cases increase, people feeling helplessness and descending over the global population. People depend on the government to protect them in dangerous times, but a virus represents a challenge that is beyond the control of leaders, which is definitely true, and that's why people don't understand, where this is going to be leading. The world's leading currencies derive value from full faith and credit of the countries that print legal tender. The spread of the virus will eat away at the trust in governments, causing currencies to fall at a time when central banks run the printing presses, exacerbating wholesale devaluation. So on Sunday night, March 8th, the world witnessed what a flood of crude oil did to the price of energy commodity. Crude oil was trading around at a high of $65 a barrel, and on January 8, 2020, 2 months later, Saudi Arabia's decision to abandon production cuts the price by the nearby NYMEX futures to a $27.34 a barrel. So as the Fed and other world central banks flood the world with liquidity, it's likely to have similar impact on the value of fiat currencies. The one currency instrument that they cannot print is gold. See, that's what makes a real money. It cannot be created nor destroyed. The dollar can be created and be destroyed, and dollar has always fallen. A fiat currency-based financial system has always failed in time. Gold has been used for 6,000 years and has never failed. So gold is a global means of exchange. Central banks around the world hold gold as an integral part of their foreign currency reserves. The yellow metal has been around for thousands of years, longer than the dollar, euro, pound, and all other world foreign exchange instruments. The difference between gold and other means of exchange, the world is central banks, monetary authorities, and governments can print currency and control money supply, while increasing the amount of gold depends on extracting the metal from the crust of the earth. So you can see how it can be a lot harder to create gold because you have to dig it out the ground. It takes manpower, it takes mapping out the geography, knowing where the gold is, and all of that as well. See, gold broke higher in dollar terms in June 2019 when the U.S. told markets the U.S. interest rates would fall by the end of the year. at that time, no one thought the U.S. rates would be at 0% by March 2020 and the world would be facing a global pandemic. Demand for gold has been rising over the past years as central banks have been adding to reserves. While the price of gold has increased in dollar terms, it has yet to reach a new record high above the 2011 peak. However, in almost all foreign cases, on all foreign exchange instruments, the price of the precious metal exceeded its all-time peak over the past months. So very interesting. If you want to keep reading on, it's talking about, it goes over the gold with IAU sell-offs and what they're witnessing for the dramatic price increase in volatility with all that. But yeah, I thought this was a very interesting article. I thought it shared some very interesting points, especially going into the dollar. I like to talk about the dollar a lot in my in my articles or in my videos, because it really does expose the truth of what we're really at, and that can be the difference between because that lack of understanding, that lack of education, that lack of knowledge can be the difference between investing into something that has intrinsic value, that has potential, and something that is bound to fail. So anyways, I'm gonna wrap this video up here. If you wanna check this article out, the link will be in the description. Make sure to smash the like button because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.